Hey folks, Dan Frio here, the rate update. Today is March 26, 2021. All of a sudden, right when I'm doing this video, the Dow jumps 450 points. Don't know why, but when we come back, I'm going to analyze it as quick as I can, so don't go away. We'll be right back. Okay, folks, so we're here, the end of the day on Friday, and the stock market all of a sudden went poof. I think what's happening is stimulus checks are starting to hit everybody's pocketbooks, and it might even be payday for a lot of people, so a lot of people are out spending, and maybe, just maybe, people on Wall Street are seeing that and saying, you know what, stocks are going to do very well in the next couple months, so we're going to load up. That's the only thing I can think of, because the stock market jumped right at the end of the bell up 450 points. That's a huge move. Okay, unfortunately, what happened when everybody starts pushing their money into the Dow, into stocks, we have a reversal on the mortgage-backed securities market. So right now, this is why everybody follows me. They're like, Dan, what's going on with mortgage rates? So let me give you a little bit of a breakdown. Mortgage rates aren't tied to the 10-year Treasury, okay? The 10-year Treasury has an indirect effect on what's happening in bonds in general. Mortgage-backed securities are a bond that trade on Wall Street. Okay, what this bond does is it's the biggest factor, the biggest component of your mortgage rate. This is the biggest thing that creates your mortgage rate. So we don't look at the 10-year Treasury to see what's going on with rates. We look at the mortgage-backed securities market. Okay, over the last couple months, we had a big deterioration in the price. This is what's happening with the price of the bond. And as we know, for those that watch my channel, when the price goes down, bad, rates go up. When the price of the bond goes up, rates come down. That's how it works. There's an inverse relationship there. Okay, so we saw a deterioration in the last couple months, but let's see what happened today. This is interesting. We came out of the gate and we had a nice little run up. And again, guys, when you're watching this, the up here means the price of the bond is going up. So what's happening then is rates are going down. But then when you have the reversal and we start going down, that means rates are coming up. So just flip this over, okay? So that's what's happening on. Let's do a refresh, because I think we had a nice little reprieve in the market. Nope. So here's what I don't like. Right here. That's a lot of selling right at the end of the day. Okay, so it looks like what's happening in the stock market, the Dow is jumping. People are pulling money out of bonds, especially mortgage-backed securities, driving up the rates and driving down the prices. Okay, so that's what's going on. We'll see if there's a continuation over the weekend and on Monday, if there's any news that comes out that can make an effect to this. But basically, you know, if you look at this, we're kind of stagnant in this field right here. Okay, so this is the last quarter, what's been happening with rates, and we've been stagnant for the last, say, week or two. So I'm okay with that. I expected us to trade right around 102.75. We're 6 basis points off of that. So I'm really not worried there. Where I am worried is how we ended the day. I don't like these reds. Reds, again, means there's more sellers than buyers, and this is a huge drop in the price. Okay, the economic calendar. What we focus on here is core personal consumption. This is what the Federal Reserve watches to see what's going on with inflation. They don't look at the GDP or anything else. They do, but this is their focal point. Okay, so month over month, we were previously, last month, we had a 0.2. In this index went up 0.2. The consensus for this month was 0.1, and we came out right at what consensus was. The year over year, we expected a 1.5. We came in at 1.4. Honestly, guys, I thought this was going to come in at like a 1.8. And I was cautious coming into today, but as you see, as we moved into the day, we had a nice rally up, and I'm thinking, okay, cool, everything's good. And then all of a sudden, everything started to deteriorate. So what did that actually do for rates? So I'm going to start posting this to show you where we are today and where we were a year ago from now. Because if you closed in the last couple days, last couple weeks, you're not looking to refinance again. But if you closed a year ago, or a little bit over a year ago, I want to just point out to you, there are certain buckets, I'll say here, certain programs that have really changed or their rates have really dropped. Okay, so we're going to go over the 30-year fixed rate. Today it's 3.36. Last year it was 3.62. So, about a 30%, say a 0.25% increase in the rate. So would you look to refinance? Probably not, unless you're looking to consolidate some high debt credit cards and so forth. The 15-year, a little bit different. If you did a 15 year ago, you're probably at 3.4. If you did it further back, you're probably closer to 4. Right now, the 15-year term is 2.81. Now, let me clarify everything. These are not my rates. This is a survey that's taken of lenders throughout the entire country, and this is the blend. This is the average that's out there. Okay, now we go into the FHA. This is basically, I'm going to put FHA/VA because our rates are the same for FHA and VA. Right now, you're looking at 2.85. A year ago, 3.5. So there's a position there to possibly look to refinance and save some money, especially if you're in a forbearance. Jumbos, huge difference. Huge difference, about a 1.25 different if you did a jumbo. So if you took out a jumbo a year or so ago, you're probably at 4.5%, 5%. Maybe give us a call. There's probably a bunch of money that you're leaving on the table right there that you can save. Now look at the ARMs. The ARMs, nobody wanted to do an ARM a year ago. Now it's becoming a little more in vogue. Okay, so that might be an area where if you're in your house and you have a 4% rate, you might say, you know what? I really don't. I plan on staying here 3, 4, 5 years or so. Maybe I look to save money over that time duration and then see where life takes me at that point. So there's a good opportunity here. That's about a 1.5% rate drop that you can have there. So that's where we are today for rates. What I ask you to do is the only thing I ask you to do, and this will be my little pitch now. Please give me a thumbs up. You're killing it. You guys are killing it on the thumbs up, and thank you so much. Subscribe down below. Hit the bell so every time I post a video, you get an alert. But check out my videos. I have over 800 videos. We're coming up on 1 million views, so that's fantastic. But what I want to do, I want to ask you and plead to you right now. If you're looking to build a home or buy a home, you need to get pre-approved. If you're building a home, you probably already got pre-approved by somebody, but you're having some trouble in your rate lock. Our phones are ringing off the hook all day. People are like, my lender only locked me for 60 days. It's not going to be done for 6 months. We have states and we have programs available that can lock you up to 1 year. It's not available everywhere in the country, but there's a lot of states that it is. And I just posted a video yesterday. So check out my channel and you can check out that video and we go over the states that's eligible for you. Next Tuesday, I'm going to have a detailed video going over forbearance, what it is, how it works, and maybe what your exit strategy should be. But if you're in a forbearance or looking to refinance, please call us because every situation is a little bit different. You need consultation, especially if you're in a forbearance. Please don't just go click like the Rockets and all these other companies and click, and hopefully it falls in place because the forbearance is really challenging. It depends on your servicer, how far behind you are, what the forbearance agreement was, what your rate is, what kind of program you're in. There's a whole slew of things there that can affect your end strategy on how to get out of the forbearance. Okay, so here's the best way to reach me, my team, and how to get information to us. Go to my if you would go to my YouTube channel. It's the Rate Update with Dan Frio. There's 800 plus videos here for you to scan through. I'd love for you to be a part of the team. But go to therateupdate.com. Scroll down below. There's an 800 number. You can reach us. 844-775-LOAN. That's 844-775-5626. The Calendly. You can go in here if you want to set up a consultation for 15, 30, or 60 minutes. You click that, it'll find an available time for you for that slot that you agree to. We'll either do it by phone or Zoom if you'd like, and we can go over any and all questions you have at that time. If you want to apply for a loan, you're mobile savvy, click the mobile app right here. It'll launch you to our mobile site. It is phenomenal. If you're desktop savvy and you'd rather do it that way, you just click the Apply Now button right there and you can start your loan process there. We have 2 functions here. These are basically questionnaires to help us and you figure out what program is best for you. If you're looking to purchase, you click this one. You're looking to refinance, you click this one. You got a ton of options on how to get a hold of us and how to start your mortgage process. So guys, that is it for today. TGIF, be safe, be happy, give a loved one a hug tonight, give them a kiss. Have a great weekend. God willing, I'll see you on Monday. Take care. Bye-bye.